Welcome to another deep dive with us. Today we're looking at what's a pretty in-depth review, actually,
Yeah.
of C2C Advanced Systems Limited.
Mm-hmm.
And this review was done by BDO India LLP.
Yeah, it's a pretty dense report, but
It is. It's a lot of numbers, a lot of charts, a lot
to unpack.
to unpack, but that's what we're here for.
Exactly. And I think it's worth it because this report, it really goes beyond just the numbers and financials.
Yeah.
It really raises some pretty significant questions about C2C's business practices, particularly around their relationships with their customers and vendors.
Okay, so let's back up for a sec for people who maybe aren't super familiar with C2C.
Sure.
So they're presenting themselves as this big leader in defense tech innovation.
Mm-hmm.
They're even getting ready, like they're prepping for an IPO.
Right.
But this report kind of paints a different picture of what's happening with their financials, doesn't it?
It really does.
Yeah.
On the surface, their revenue has grown massively over the last few years, which you would typically think is a good thing.
Right.
But when you dig a little deeper, their employee costs seem really low
Yeah, that's weird.
for a software company.
Mhm.
And then you look at their purchases, and they don't really line up with what they're supposedly selling.
Mm.
So it's like they're spending a lot on something, but not on the people you would expect to be creating the software.
So they're spending money just not where you think they should be.
Exactly.
Oh, so that's interesting. All right.
Yeah.
So let's talk about their customers then, because that was another thing that kind of stood out in this report.
For sure.
What's the deal there? I mean, who are they selling all this software to if their employee costs are so low?
Right. Well, that's where it gets even more interesting because a huge chunk of C2C's sales are concentrated within just a handful of customers.
Okay.
And a lot of those customers seem to be really closely linked to C2C itself.
Okay, so like how close are we talking here? Give us some examples.
Well, we're talking shared addresses, the same individuals signing contracts for multiple customers.
Oh, wow.
And even family ties between C2C executives and these supposedly independent companies.
Hold on. So it's not just like business relationships. There's personal connections here too.
Yeah, it gets a little fuzzy.
That is really interesting.
Yeah.
Okay, so then are all these customers even in the defense industry?
That's the other curious thing. A lot of these customers aren't even operating in defense.
Really?
Yeah. For instance, one of their biggest clients is listed as an oil and gas company,
What?
but they're supposedly buying defense software.
And that seems a little bit suspicious.
It makes you wonder if these sales are even legitimate.
Yeah, especially if they're trying to attract investors with this IPO.
Right.
Okay, well, we've talked about the customers.
Right.
What about the other side of this? What about the vendors?
The vendor.
What did the report find out about where they're getting their stuff?
Well, this is where the report starts to feel a little bit like a detective novel. A lot of C2C's vendors are these small, almost impossible to find companies. It's possible some of them don't even exist.
Wait, they might be doing business with companies that don't exist.
Well, the report found things like missing signatures on invoices and addresses that lead to empty lots.
Wow.
So, yeah, it's possible.
That is very strange.
Yeah.
Okay, so, and we talked earlier about how CTC seems to be having trouble collecting payments from their customers.
Mm-hmm.
So are they having the same problem with these mystery vendors, or is there something else going on?
Well, that's the thing. While they're struggling to get paid by their customers, they seem to be paying these questionable vendors really quickly. It's definitely an interesting inconsistency.
It does not seem to add up.
Yeah.
So we've got potentially made-up customers, phantom vendors, and a company that can't seem to keep its own payments straight.
Yeah, it's a lot.
Okay, so C2C filed what's called a red herring prospectus, or an RHP for their IPO. Did the report look at that document at all?
It did, and unsurprisingly, even the RHP has some pretty major inconsistencies.
Like what?
Well, for example, remember those closely connected customers we were just talking about?
Yeah.
They weren't properly disclosed as related parties in the RHP.
Well, so they're not being upfront about those relationships?
Not exactly.
But what else did they find in the RHP?
Well, there were also some discrepancies in the numbers, specifically the amounts for loans and payments to some of these related companies were totally different in the RHP compared to what was in their accounting books.
So they're kind of presenting one picture to potential investors.
Yeah.
But the reality is something else entirely.
It seems that way.
Okay, and there's one related party that I want to make sure we talk about.
Okay.
And it's Real-Time Tech Solutions, or RTTS. What's the story with them?
Well, RTTS is a really fascinating piece of this whole puzzle.
Okay.
So this company was supposedly absorbed by C2C in a merger.
Right.
But The details are a little bit more complicated than that.
I bet they are. Let's unpack that in the next part of this deep dive.
Sounds good. So before the break, we were talking about real-time tech solutions.
Right. RTTS.
RTTS, exactly.
This was the company that supposedly got absorbed by C2C.
Right, through a merger.
But I have a feeling it's not as simple as that.
It's definitely more complicated than that. The report actually highlights that C2C was already paying RTTS's salaries and expenses even before the merger was finalized.
So they were propping them up?
Yeah, essentially. And they even used funds from their own private placements to support RTTS financially.
Why would they do that?
That's the big question. And to make things even more complicated, RTTS has a history of financial troubles and defaults.
Okay.
Which conveniently C2C didn't mention in their red herring prospectus.
So they're not being totally transparent with potential investors?
Not really.
Yeah, that's a pretty big deal.
Yeah, it raises a lot of concerns about their transparency and their financial health.
Right. And speaking of financial health, remember how we were talking about how C2C seems to have trouble collecting payments from its customers? Well, the report actually dives into a specific example with a customer called Tanjung Offshore Services.
Right.
That name sounds familiar.
Yeah.
Wasn't that the oil and gas company that was supposedly buying defense software?
That's the one. And get this, C2C has recorded over INR 1,007 lakhs in sales to Tanjung.
Okay.
But they haven't received a single rupee in payment.
Over 1,007 lakhs. That's a lot of money.
It's over 100 million rupees.
Yeah, to just write off. Do they actually think Tanjung is going to pay them, or what's the deal there?
It's hard to say. The report suggests that these sales might not even be legitimate.
What?
So C2C claims that they're billing Tanjung for travel expenses related to their employees working on site.
Okay.
But the contract doesn't actually mention any such arrangement.
So they're just like making stuff up.
Essentially, yeah. It definitely raises concerns about their financial transparency and their motives.
For sure. Okay, so that's the customers. Now what about those questionable vendors?
Yes.
The mystery.
The ones that might not even exist. Right. So BDO India took a closer look at 4 of C2C's biggest suppliers, KYSH Impex, Everrich Traders, Shri Krishna Enterprises, and Elco Systems Business Solutions, Private Ltd.
And what did they find out?
Well, 3 out of the 4 are these small, privately held companies that have almost no public presence. It's really difficult to find any information about them. One of them, Elco Systems, actually reported 0 revenue for several years.
0.
Yeah, which is pretty unusual for a company that's supposed to be doing business with a successful tech firm.
Right, you would think they would have some sort of revenue if they were supplying all this stuff.
Exactly. And on top of that, remember how we were talking about how some of these vendors might not even be real?
Oh yeah, the ghost companies.
Right. Well, the report found missing signatures and stamps on invoices from several vendors.
Okay.
And one of them, Shri Krishna Enterprises, couldn't be located at the address that was listed on their invoices or even on the GST website.
So are they just making these vendors up?
It really makes you wonder.
To make it look like they have a bigger supply chain than they do.
Possibly, yeah.
That's crazy.
Yeah.
And didn't we talk about how they were quick to pay these vendors, even though they were having trouble collecting payments from their customers?
Exactly. It's another one of those head-scratching contradictions.
It really is. And to add to the mystery, the report actually found that there was a significant spike in purchases from these vendors in March and September of 2024.
Oh, interesting.
Which, if I remember correctly, are the end dates of C2C's financial reporting periods.
You have a good memory. That's right.
So are they maybe manipulating their purchases to make their financials look better?
It's definitely a possibility, especially when you consider how important it is to have strong financials when you're trying to attract investors.
Right. So we've got potentially made-up customers, potentially fake vendors, and now it looks like they might be manipulating their purchases.
That's not a good look.
Not at all.
Yeah.
What else did the report uncover?
Well, it also shed some light on C2C's inventory management.
Or lack thereof, it sounds like.
Yeah, pretty much. So BDO India found that C2C wasn't keeping proper inventory records in their accounting system. They had to rely on physical copies of inventory details.
Really? A tech company that doesn't track its inventory electronically?
Apparently not.
That's wild.
Yeah, it definitely raises concerns about the accuracy of their financial reporting.
Okay, so what did those physical inventory records show?
Well, there were some interesting discrepancies there, too.
Like what?
For example, there was a lot of inventory that was listed as work in progress for customers like C2CI Inc. and Synergy Information Technology. Now remember, those contracts were mainly for software delivery,
Right.
which is typically delivered digitally. You don't really have physical work in progress for software.
So why would they have work-in-progress inventory for software sales?
It's a good question. It's possible they're trying to inflate their inventory value to make their financials look better.
It seems like that's a bit of a recurring theme here.
It does, doesn't it?
Remember earlier when we were talking about how C2C was paying expenses for real-time tech solutions, even though they had supposedly already absorbed RTPS?
Yeah.
They claimed those payments were part of a separate agreement, but they didn't actually provide any documentation to prove it.
Right. It's a little convenient. It does seem that way. And what about the funds they used from their private placements to support RTTS?
Right. They claim those were legitimate investments.
Right.
But the report shows that those transactions actually involved entities that are closely tied to C2C executives.
Okay, so give me an example.
Sure. So they received funds from RCA Restructuring and Capital Advisors Private Ltd.
Okay.
Which is a company whose past director was actually C2C's CFO, Murtaza Ali.
So not exactly arm's length investments then.
Not really. It seems like there might be some conflicts of interest going on.
This is starting to sound a little shady.
A little bit, yeah.
So did CDC have a chance to respond to all these findings?
They did, but their explanations were often vague.
They didn't have a lot of supporting documentation, and sometimes they just blamed clerical errors.
Clerical errors?
Yeah.
For transactions worth millions of rupees.
Yeah. It's a bit hard to believe.
That's a lot of clerical errors.
And in some cases, their responses actually contradicted information that they had presented in their RHP.
Oh, wow. So they're not even being consistent with their story.
Not really. Which definitely doesn't help their credibility.
Okay, so we've got questionable relationships, accounting inconsistencies, unconvincing explanations. What does all this mean for C2C's IPO?
Well, if I were a potential investor, I would be hitting the pause button after reading this report.
Yeah, I think I would too.
It raises serious doubts about their financial health, their transparency, and even the legitimacy of their business model.
And we haven't even talked about what this could mean for the defense industry.
Right.
If C2C isn't actually as capable or innovative as they say they are.
Exactly. This isn't just about one company's financials.
Right, yeah.
This report raises bigger questions about the entire defense sector.
Yeah. That's a great point. We'll have to explore that more in the final part of our deep dive.
Yeah.
We've spent a lot of time in this deep dive looking at these potentially concerning practices that C2C Advanced Systems Limited.
Yeah, it's been quite the deep dive.
It has been. And I think, as we sort of wrap up this deep dive, I think it's important to step back from the balance sheets, from the invoices, from all the numbers.
Right.
And think about the bigger picture here.
For sure.
Because this isn't just about one company's financials.
No.
This raises some broader questions about the entire defense industry.
Absolutely. We can't really look at this as just like an isolated incident.
Right.
If C2C is inflating sales, relying on potentially fake vendors and obscuring their relationships with related parties.
Yeah.
What does that say about the systems that are supposed to be in place to vet companies that are operating in such an important industry?
It really makes you wonder about the level of scrutiny that's applied to companies that are, entrusted with national security. And I guess what are the potential consequences if these kinds of practices become more widespread?
Well, I think a big part of the defense industry relies on public trust and accountability. And if a company like C2C, that's claiming to be a leader in defense tech, if they're engaging in these kinds of practices, it really erodes that trust. And it also raises concerns about how reliable their tech actually is.
Yeah, the stakes are so high.
Yeah, for sure.
If they're cutting corners with their financials, does that mean they're also cutting corners when they're developing the technology that our national security depends on?
It's a really unsettling question that this report kind of leaves us with.
Yeah, and it's not just about the tech itself.
Right.
I mean, their close ties to certain customers and vendors raises the possibility of conflicts of interest.
Absolutely.
And undue influence.
Yeah.
And if those connections aren't transparent, it creates this environment where favoritism can happen.
Right.
And national security interests could potentially be jeopardized.
It's a big deal.
It is a big deal.
Yeah.
But, we did mention earlier that this report has its limitations.
Yeah, of course.
What information are we missing that could help us get a clearer picture of what's happening at C2C?
Well, you have to keep in mind, this report is based on a limited financial review.
Okay.
It does a great job of highlighting these red flags, the inconsistencies, and these questionable relationships.
Yeah.
But we don't actually have access to things like the underlying contracts, internal communications, or emails.
Right.
Those kinds of details could help explain why they're doing these things.
So it's like we have a puzzle, but half the pieces are missing.
Exactly.
We can see the outline of something potentially troubling, but we can't quite grasp the full picture.
But even with those missing pieces,
Right.
the pieces we do have are definitely concerning enough to warrant further investigation.
Yeah, I think that's a fair assessment. And, I think this deep dive really highlights how important it is to have thorough due diligence,
Yeah.
rigorous oversight, and strong whistleblowing mechanisms
Absolutely.
within the defense industry.
It's critical.
It's critical.
Yeah.
Investors, regulators, even potential customers
Right.
need to be aware of these red flags. They need to demand a higher level of transparency and accountability from companies like C2C.
For sure.
Because if we just ignore these issues, the consequences could be huge.
Yeah, absolutely.
So, for you, the listener, the key takeaway here, I think, is knowledge is power.
I like that.
By understanding these red flags,
Yeah.
by asking the right questions,
Yeah.
you can make more informed decisions about the companies you support and the products that you use.
Right.
So don't be afraid to dig deeper,
For sure.
seek out more information, and challenge the status quo.
Yeah, because the security and integrity of our nation could depend on it.
Well, thank you so much for joining us for another deep dive.
My pleasure. Thanks for having me.